Hey everybody, welcome to this free edition of our Trader Use Group Weekly Roundup. This is for the first trading week of 2021 with the week ending January 8th. Hey everybody, I'm Preston Brent. Thanks for tuning in. I hope you had a really good holiday end of year 2020 going into 2021. Remember, don't be a rat brain trader. You want to be the red striped zebra. And this week's theme is turn those printing presses back on. So let's just kind of take a look at where we were, where we're going at a kind of a high level here in this shortened weekly roundup for the week. So if we come in and take a look at it, let's take a look at the uh, index performance for the U.S. markets. You can see just about everything is in the green for the week. The Dow, S&P, NASDAQ, Russell, all in the green. Russell continuing its winning performance as we're seeing value and small cap overtake technology and everybody else. It finished the week up 5.91%. Year to date, it's the same as weekly. It's the first week of the year. You can see the PE trailing ratio 41.7, and the forward PE ratio really high at 25.45, but everybody should know that. Dividend yield 1.57, 10-year treasury 1.105. More on that in a minute. And the spread between the two has come down now to 46.5 basis points. And then the current VIX, it was down just a little bit for the week as we finished off the first week of 2021. And you can see now the best sector for the week as we kick off 21 is energy, up 9.28%. The worst was utilities, about 59 basis points underwater. Year-to-date sector performance so far this year, granted it's only the first week, but the energy up 7.46%. The worst, real estate coming in at a minus 4.29%. Now, if we look at the global markets, you can also see everybody is in the green for the week. So net, this past week, the first kickoff week in 2021, very, very strong. Okay, now let's just kind of go into some little bit of details on why that is. So let's take a look at some of the weekly sound bites. Let's look at the market index again, just kind of dissect it just a little bit. We continue to march to record highs. Small caps, as I just showed you, outperform large caps by a wide margin. Value stocks are continuing to outpace growth. Now, for those of you that are following my free weekly roundup, we've been talking about this since early November. Now, for our members, we've been doing really well because I got our members into value over growth back last November. And we're also seeing this surge in longer term treasury bond yields. That's helping financials, which is part of the growth that we're seeing. Cyclicals and so forth are doing very well. Also, there is this huge heightened prospect for significant fiscal stimulus now that the Democrats here in the U.S. control both the Congress and the Senate and the White House. Then the markets are up primarily because the markets just primarily love money, like a 5-year-old kid loving a box of chocolates. The financial markets love the printing presses running full steam ahead. Okay. Now, there's going to be some heightened inflationary dangers and a few other things that are going to pop up, but at least in the near term, markets really like what they see as far as more spending. Now, on the economic front, this past Tuesday, we saw the ISM, which is a gauge of U.S. manufacturing. It rose to its highest level since 2018. It came in at 60.7. Of course, anything over 50 is expansion. That's a huge move, guys. The ISM services side also surprised on the upside, hitting 57.2, its highest level in 3 months. So we did get some really good news on the manufacturing side. Meanwhile, the labor market showed a pretty sharp slowdown, mostly due to job losses in bars and restaurants and things like that, as some of the larger cities like New York or state New York and California and others continue to stay shut down, which I think to their detriment, but that's what they're doing. We also saw non-farm payrolls come in this past Friday, falling by 140,000 in December. It's the first monthly decline since April of this year. So it does show that we've got kind of a push-pull economy right now with manufacturing expanding and job losses, which really are attributable to, California, New York, and other northern states that are and out west states just shutting down, which I really don't think they should, but that's what they're doing. I'm down here in Florida and we're running it great. Retail and restaurants all open. I think that's, it's good for the small business owner. Meanwhile, the bond market is really didn't really move that much on the poor jobs report. The yield on the 10-year benchmark moved higher, actually closed above the one handle. It had a high in the middle of the week this week, about 1.12. That's the highest it's been since March. The interest rates, and we're seeing the muni market, the municipal bond market, is pretty resilient also with this sell-off in government bonds. And just hang on one second, guys. Hang on one second. I'm back with you again. So we're seeing the markets really don't fear inflation right now. But we are seeing this slow rise in interest rates, which are still not that bad for the markets. Okay. We're also seeing shares in Europe, even though they're having really stronger lockdowns, still have this cough, are rising on hopes that this coronavirus vaccine that's going around is going to help. And also this massive stimulus going on in the U.S. is just going to really spur economic activity a little bit. So all in all, markets are really off to a stronger than expected start as we kick off this year. One other final point, and then we're going to jump in to the charts here. The World Bank came out this week with their global economic prospects and report, and their forecast of global growth in 2021 is coming in at 4%. And that was followed by a 4.3% contraction this past year in 2020. Now, the World Bank did lower their GDP targets for about half of the countries worldwide. And the latest GDP for 21 global forecast by these guys is about 4.2%. So they're saying, and there's kind of a binary choice, because what the World Bank is saying is the worst case scenario if infections accelerate and the vaccine process is delayed a little bit because of the logistics of moving it around, global growth could be as low as 1.6%. Now, one thing about all these forecasts, I never really follow them that much. It does, in the very, very short term, tend to put more money in the market when they're more positive than less money, but they work themselves out very quickly. So we really can't, follow that much. Now, if we come over and then just look at, and I did cover Europe and the World Bank, so that's kind of where we're sitting right now. Let me just show you a couple of quick charts here in this shortened weekly roundup. And for our members, we'll have our first weekly market watch session this Sunday evening. Again, if you're not a member, I highly encourage you to come in, because we've been really doing really well. Number of years that we've been running our group. I've been running it since 2008, and we've just, really knocked the ball out of the park with some of the things that we're doing. So for those of you that are non-members, if you want to come in and join us, then highly encourage you to do so, because we trade not only the financial markets, the equities, and various sectors, but we also get into currencies and bond market. Also, we spent a lot of time in the commodities as well. Commodities has just been really kick-ass for us last year, and that's going to be another thing that's going to take off in 2021, 2022, are commodities, which I think are eventually going to bring inflation back to us. So let me just switch you over to a chart here. What I'm going to do is I'm going to show you a weekly chart of the E-mini S&P 500 futures. And by the way, we get members that come in all over the world. We've got members from Europe, Asia, Africa, South Africa, Latin American markets, Canadian markets, Eastern European markets. We also have members in obviously the U.S. as well, of course, but It's a truly a global user group. Now, which is why we spend a lot of time in the commodities. You can see on this weekly chart here, this one candle it gave us the 2021 high price and the 2021 low price. So that 2021 low price of 36.52.50 is going to be a key pivot point for us as we move forward over the next 2 or 3 weeks. Keep in mind, earnings are going to kick off next week. And Friday, we're going to end the week with major global money center banks, JP Morgan, Chase, Wells Fargo, and Citi are going to be putting their earnings out first thing Friday morning. I expect them, we've seen financials obviously run better when interest rates are moving up. So that's just something that I think is going to be real interesting for us as we move forward. I've got key pivot point levels underneath the price. I've shown you the 2019 close, and I'm showing you the 2020 closing price right here. So we're in the green for the year. Now, there's a lot of other things to talk about with other indexes. For our members, we're going to go into it this Sunday evening. Our FANG index, which I've customized on this charting package signal, you can see here we still the highs were actually made back in September or early September of 2020, and they've been essentially running sideways as we've seen this global rotation, this global shift from growth to value, and we're going to continue to see that. In the Q4 of 2019, the shift from growth to value only lasted about 4 or 5 weeks, and then it shifted back again as we went through most of 2020, especially coming out of the pandemic in March 23rd lows of 2020. But we're seeing it hold up much stronger this time. And if we come in here and let's look at the volatility, the VIX, CBOE VIX, you can see here, this is a weekly chart, but we're holding we're just slightly in the upper boundary of the yellow zone of the VIX. Now, I got these color coded because generally it's just a general rule when we move in different areas of volatility, different option strategies tend to work better than others. And we use these as a watchword. So we're kind of in the yellow zone now. We're still above 21 on the VIX. It's still arbitrarily high. And I think the markets are a little bit leery of this big move up. I'm starting to see some trepidation in some big money managers as they're starting to hedge some of the bet. So we just have to pay close attention to that. If we look at the bond market, again, this is part of our low-hanging fruit trade I was telling our members on. I said bonds are going to be going lower, and you can see right here, this 1 week, bonds just started a sell-off, and it moved the 10-year Treasury over 1%. And if we look at the 10-year interest rate, I'll put it here, you can see really going all the way back to August of 2020, interest rates have been slowly moving higher. We had a breakout this week. You can see the pivot point here. The previous pivot high went all the way back to early June, and we broke out of that level. Big move up, all right? And the interest rate now is at 1.105 for the 10-year. So that is going to present some other opportunities as well as a little bit of consternation for certain equities. We'll have to watch those very closely. Obviously, real estate does not like rising interest rates. As I showed you, that was the week's worst performer in the U.S. Equities by sector. But there's going to be some opportunities as well in that. Currency-wise, let me just shift it back to a daily chart again. And if we look at the dollar, this has been a very overcrowded trade, okay? And as I've been telling our members here, we hit a 2020 low price right here. I'm going to give it a little bit of time before I put the 2021 lines in. But you can see here, any rally up, this is the 50 moving average, 50 period EMA, or 50 bar EMA. Anything up in this area here is going to be subject to shorting again, which is just very heavy trade, very over allocated by a lot of money managers and a lot of commodity traders and so forth. It's just a very short product. By the same token, the euro is very long. And as you guys remember, back all the way over here, I was having our members going long the euro. I just called it a low-hanging fruit trade, and it just turned out to be a whopper. I think it's going to continue a run, but not with a little bit of a test and a little bit of a pullback. So any pullbacks in the euro, I'm going to suggest we buy. Any rally in the dollar, I'm going to suggest we sell. I think we will get a rally in the dollar for another month or so, and then it's going to roll back over again. There's going to be some interesting price movement in the first quarter. Our members, I'll go through it, and it'll be an opportunity to really load the boat as we go into the second half of 2021. Okay. And of course, if we look at metals, and let's look at gold, it had a really, really bad day on Friday, came down 63 points, right? And we tried to have this breakout here. And if we look at it, you can see this move up, and then a retest, and then the retest failed. It came back down, and then it held at the 61.8 fib node, fairly close at this level right here. So we've got to watch it very closely to see. I think longer term gold is going to go higher, so I'm not making too much of this move here, but we have to honor the move. And I will use the 200 EMA as kind of a line in the sand right around our shaded zone here, which is a key support level for gold. Same thing with silver. Longer term, I am long that. Now, there's some other metals, members, that we're going to talk about that's going to offer up really ample opportunities. As you guys know, I had our members in copper. That's just been a home run trade for us for 2021. I think that should continue going into 2020. I had us in long copper. Really a home run trade. Grand slam trade, actually. It was a 5x trade. So I don't see that changing for 2021. Okay. If we look at energy, as I showed you, energy is doing very well. Saudi Arabia came out and surprised the world by cutting production. So that's going to boost oil. It's up to 52.73. All right. We've been long oil, and I said you could do iron condors, but I wouldn't do iron condors. I would do coal condors, and I would structure them unbalanced so that any big move here, the risk of a bigger move in oil, as I was telling our members, is more upside risk than downside. So you want to structure the condors so that you can make money if it really blows through the stack like this, which is what it's done. It's going to find some support up in this area, but that would be my recommendation. Commodities are getting stronger, and that will in turn drive up inflation. And then, of course, if we look at nat gas, any rally in nat gas needs to be sold. So we're going to be looking at this as possible sell opportunity in natural gas. Okay, so that's just a quick rundown of what we're looking at right now. Members, for this Sunday evening and our weekly market watch, I'll go through some really interesting stocks and some themes that we need to consider for 2021 so that we can continue our run making really good solid money. I think 2021 is going to be a little bit harder than 2020 for people. That there's going to be some surprises that some people will not be expecting. We're going to be on top of it, and we're going to have fun with it. All right, everybody, have a really great weekend. Members, I will see you tomorrow evening for our weekly market watch. Take care, folks. Ciao.